Hello, good evening, everyone. Good to see everyone again on this Friday evening. Okay, so today it is the 16th of December 2022. So we are fast approaching Christmas very soon. So once again, thank you for tuning in on this Facebook Live and also on the YouTube streaming also. Wherever you are, if you can hear me loud and clear, please say a hi to me in the comments, in the chat box. Give me a like, share, comment wherever you are. Okay, I'm friendly, I won't bite, so just give me a like, share, or comment. And this is also to tell Facebook and also on YouTube that you want to engage with MarketWise Asia, because if you don't do that, they'll think that the algorithm will think that you don't like us. Okay, and sooner or later our content will not show on your Facebook and also on YouTube. Okay, all right, so let's take a look at the comments right now. Hello, Wei Lun, CJ, Guang Pang from YouTube. Okay, Mary, yep, Dave, Feng Rui, okay, Juki, Alex Lee, okay, same name. Tim, okay, SP, Yoshi, Iwa, Pauline, okay, Mark, okay, all right. So good to see every one of you here. Xiang Lun, Loli, okay, fantastic. So the market has been coming down for the past few days. Okay, how are you guys feeling? Is it very anxious about the state of the market right now? Okay, later I'll go through with you my outlook and also some of my views. Okay, so before that, just to let you know that today's Facebook and also YouTube streaming is once again proudly sponsored by NASDAQ. So before we kick off the session, okay, Incher from the NASDAQ APAC Head of Product and Support Investment Intelligence from NASDAQ. Okay, once again, we share with you more on the total debt data. So the video, it is about 4 minutes long. He won't be doing live with you. It's a pre-recorded video, so it is about 4 minutes. Okay, so I will see you guys again later in about 5 minutes time. So meanwhile, learn a bit more from Incher. So let me play the video right now. See you guys in 5 minutes time. Okay, understanding the debt data from NASDAQ.
Hello, everyone. My name is Incher, Head of APAC Products and Support in the Investment Intelligence Division. This is part of NASDAQ ongoing investor education effort for the APAC investors, and today I'm going to share with you about the understanding of the debt data in the US market. There'll be two parts to this, and for today, I'll be covering the US equity market structure and the trading sessions in the US market. Unlike the APAC exchanges like Singapore Exchange or Hong Kong Exchange, who has only one exchange in its market, in the US, there are 17 regulated trading exchanges. I've emphasized the term trading exchanges because only 5 of these 17 exchanges are listing exchanges. For the purpose of understanding the debt data, only the on-exchange volume are being referenced to, because for off-exchange trades, there's basically no order debt per se. As most of you may know, US market trading hours includes pre-opening, regular trading hours, and after hours. There's also an auction period at pre-opening from 9:25 a.m. to 9:30 a.m. and at pre-close between 3:50 p.m. to 4 p.m. From the chart, you can see that majority of the trading volume occurs during the regular trading hours, and this is where the bid-ask spreads are the tightest. More than 90% of the volume occurs during the regular trading hours. It's like suddenly everybody wakes up at 9:30 a.m. and started trading and went to sleep at 4 p.m. after market close. Essentially, this is what the chart is showing. The understanding of this sets the stage for the understanding of debt data characteristics of the US market better. To help better understanding how the bid-ask spreads and dollar traded volume between different trading sessions in the US market, we utilize the Russell 1000 index component stocks using the debt data from 2 sources, NASDAQ and NYSE. Basically, the Russell 1000 index represents the top 1,000 companies by market capitalization in the United States. On the left-hand side, you can see that during the pre-opening and after hours, the spreads of the debt data is more than 200 basis points and 190 basis points respectively. When it comes to the regular trading hours, the bid-ask spread suddenly narrowed to 12 basis points and 25 basis points respectively between NASDAQ and NYSE Arca depth data. As you know, tighter spreads begets better trading volume. On the right-hand side, it is evident that the dollar trading value is higher during regular trading hours, and NASDAQ has far better dollar traded volume during the trading day. At this point, I would also like to take this opportunity to highlight that trading in the pre and post-market is riskier due to low participation and price volatility. To summarize, you can see that better spreads brings better trading volume, and NASDAQ has the majority of this trading volume as well. Also, most of the trading activities occurs during regular trading hours, and it's like US suddenly wakes up during this period and abruptly went to sleep after 4 p.m. On this note, I conclude part 1 of my presentation on understanding of depth data. So stay tuned for part 2 of my sharing session. Last but not least, if you are looking for more content on the US market, feel free to visit this website. Thank you.
I think I didn't on my mic. Okay, sorry about that. I didn't on my mic just now. So once again, thank you, Incher, APAC Head of Product Support Investment Intelligence from NASDAQ. Okay, we'll share with you more on the NASDAQ depth data. Okay, sorry about the mic issue. I think we have the sound okay already, right? If everything is okay, mic test okay, you can hear me. Okay, just type okay in the comments. You should hear me right now already. Okay, all right, can right? Okay, so yeah, by the way, today is quad witching day. So for those who don't know what is quadruple witching, right? So quadruple witching refers to the simultaneously, expiration of the stock index futures, stock index options, stock options, and single stock futures derivative and such. So today's price action could be quite volatile, as you can see, just at the start of the, I think pre-market or just at the start of the market open, the market is actually positive. But right now the market, it is down. The S&P is down about 1.4%. Okay, all right. So once again, thank you those who joined me just recently, as in just right now. Okay, right now we have about 200 people in the room right now, both on YouTube and also on Facebook. So let me share this screen right now. So disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Okay, Alex could be wrong. So please do your own due diligence. Okay, Ken? All right. So before we get really started, just a few announcements and website for you to know over here. All right. Once again, time passes very fast. January is approaching very fast. The new year is coming in 2023. So we have the Market Insights Virtual Summit that's coming up on the 14th and 15th of January 2023. Okay, you can register right now. Okay, I'll post the link in the comments. All right, so this site is something like this. Okay, so you should be able to see the link in the comments. All right, so Market Insights Virtual Summit. So this time around, we also have new speakers and also some of the resident speakers as well. Okay, of course, the keynote speakers is Ray Barros. Okay, the another speakers, the new speakers, it is Mr. Lu Chengchuan. Okay, I'm sure some of you might have heard of him before. He's the 1M65 movement gentleman over here. All right, so he had also quite a number of followings, okay, on YouTube as well. So it could be exciting. This is the new year, okay, 2023. Okay, how is the market going to fare? What are the trading strategies, investment strategies that you need to undertake? Okay, what should you do in the coming new year and all this stuff? All right, okay, we have Vinny, J-Tone, also resident speaker, Caden, of course, Colin. It has been quite some time since he last spoke at the summit. He's coming back this time again also. All right, and also, of course, Royston also. So do register for this event. It is totally free. And also, of course, register now to receive a report and also participate in our lucky draw. Okay. Of course, we have this Art of Explosive Profits, okay, that's sponsored by Jay, all right, that's worth $799, and we're also giving a 17-inch, okay, full HD portable screen that's worth about $500, and of course we have some Starbucks gift voucher that's worth $20, five Starbucks gift voucher that's worth $20 to be given away. All right, so we don't know Mr. Lu. Okay, so and of course we have this interesting one, seasonal stock market trends for the first quarter of 2023. Okay, I'll share with you the key sectors and industries to watch for the first quarter of 2023 and the bonus training video. Okay, so this list should look something, is it like this? Let me see. Okay, it should look something like this. Okay, let me post the screen share for you. Okay, of course, by obvious reason, okay, the left hand side, the ticker symbol, the company ETF, all this I already shaded. Okay, okay. So I'll share with you, start on what day, end on what day, what's the percentage win, or what's the number of years, calendar years, and all this, okay, what industry that it is. So for those who have been following me for some time, right, you should know that, once in a while, I'll share with you what are the key sectors, what the seasonals, stocks, ETF, industry that you should look at. So this one will compile the more interesting one, not exhaustive, okay, but quite a number, okay. So you can get to know at one glance what are the key things to look at in January and also in February. All right. So if you want to get this report, okay, please please register for this event. No longer pre-register. Please register for this event. And just to take note, for those who have already pre-registered for the event, you should have already received this report. I think a few days ago in your email. Please, okay, search for my email. Okay, you should receive it, because I checked the last data. Only about 50% open the emails. There are hundreds of you, more than, I think, about 300-400 of you pre-registered for this event. So I think some of you didn't manage to read the email or get lost, whatever it is. Okay, it is there. So please search for my email and you should get it. Okay, and Telegram, YouTube channel, please register and subscribe. Okay, I will post the link in the comments as well. Okay, so for the Telegram channel, like for example, some of the more of the time sensitive things that I mentioned, right, I will just post it on the YouTube as well. So like as early as December 13, okay, just on the day of the CPI data. All right, so I mentioned that there's a divergence between the indices and the VIX ratio, so I'll be more wary. So these are things that, time sensitive lah. Okay, I don't share it in Facebook, and also, of course, I don't share it on the EDM as well, email. Okay, so please subscribe to our Telegram channel. Okay, so Pauline, okay, you receive it already, that's good. Okay, so yeah, and also if you want to follow some of my Twitter, okay, so you can post the link in the comments as well. So this is more of my personal, some of the trade ideas and such. Okay, all right. The course, okay, I won't go through it. I have a course as well. It is free. You want to go through it yourself. You can go through. Okay, I don't want to go too much things on my announcement. Okay, so okay, let's get started right now. Okay, so yeah, I think by now you guys should know about this FOMC meeting just ended on Wednesday, right? Okay, so the expected terminal rate of this 5.1 equivalent to a target range of 5% to 5.25. So the Fed right now want to increase, okay, so-called the terminal, the interest rate where they should end, it is on at about 5.1%. So in case you don't know, so let me, what's the link? I want to get the link. Okay, so the link, it is over here. All right, so this is from CNBC. Okay, let me copy the link. Copy link, I'll post here. Okay. All right, so the Fed projects raising rates as high as 5.1%. Okay, yeah, so this is what spooked the market. Initially, it was about 4.8%. So the Fed will continue to hike, okay, until about 5%. But it's very near. Right now, it's about 4.5%. So it's very near already. Okay. So which means that in the coming few months or so, okay, how is the Fed going to hike? By what percentage and such? Okay. And once again, I will show you this link. Okay, this is the target rate from CME, which I mentioned before quite a number of times if you have been watching me. So nothing new over here. All right. So the next FOMC meeting is about 47 days away. It's quite long away. So it's on the 1st Feb of 2023. So right now the interest, the rate is at about 4.5%. All right, which means that in 1st February, okay, to 4.75%, there's a 73% chance. Okay, which means that the Fed will hike. There's a good chance that it will hike only 0.25%. All right, so this is on the 1st February in 2023 next year. Okay, and subsequently in March 22nd of March 2023, okay, again 54.25%, okay, that you go to about 5%, which means that it's another 0.25% hike. Okay, all right, so which means that I think there's a good chance that in the next two Federal Reserve meeting will be 0.25 and 0.25. Okay, so nothing new over here lah. So this is just the standard news that I'm gonna go through over here. Right. By the way, I'm gonna share with you this link also. This is I just discovered recently. I know that there are calendars, like Daily FX, Forex Factory that give you all the important release. But this is another source. All right, if you want to. So this is from BLS.government. I'll post the link in the comments over here. Okay, so this is how it looked like. This. Okay, so this is the US Bureau of Labor Statistics. So it will share with you, okay, of course, on this link, it's just the CPI data lah. So it will tell you the next, or when is the next CPI data. So you know that in January, it is on 14, February, it is 14 also, March 12, somewhere around there, like the mid-month for the CPI data. And if you want to know, for example, like, okay, let's say, for example, December, on the left-hand side over here, on December 2022, what are all the important, calendar then to take note of, it is all there as well. All right. Okay. So this is something interesting. And if you want to, put all these things inside the your calendar, you can also download this calendar, okay, .ics into your handphone, into your Android and Apple as well. So this is a pretty useful site. Okay, so once again, I'll post the link in the comments. Okay, so I'll post it there over here. And there's a question from subscriber as well. So I will share a view also from a few subscribers over here before I go into that. And yeah, so Timothy, I'm not sure whether Timothy is here tonight. Okay, so Timothy actually, emailed me. I posted at MW Facebook. The question is, is this a good news? Sales down means people spend less demand, and prices will drop. He's referring to the retail spending over here. So I think let me try to find the link over here. Let me see over here. Can I find it? Okay. So this is the oops, kind of hang over here. Okay, so this is the one that we're referring to over here. The new data showed retail sales decline more than expected in November, raising fears that the Fed relentless interest rate hike are tipping the economy into a recession. Okay, so he asked me, is it good news? Sales down mean people spend less demand, prices will drop, and inflation will come down even further. So why will the market drop? So any answer from you guys or not? Give me a like, share, comments. Please entertain me. Any other answer will do. So why the market drop when inflation will come down, when people spend less and such? Okay. Any answer or not? Anyway, all these answers, given by the market, by the news media, to me, it's not really that important. It is actually, just narrative. At that point in time, what the journalists want you to, want to explain. They'll give you a one reasons why the market will drop and such. Okay. But if you really want my personal view, okay, it is because you think about it, okay? All right. So if people spend less demand and prices, okay, what are the consequences? Okay, what are the consequences? Right. The consequences is that people spend less, okay? They don't spend on all the luxury goods or even on the basic necessity, okay? Companies who are making all these products, selling all these products, this item, make less money, correct or not? Because people spend less, they spend less on this product. And people, and the company make less revenue, make less profits, okay? What are they going to do? Okay, they retrench people. And once retrench people, okay, the retrench people has lesser money to spend. Lesser money to spend, they even spend lesser on all the products that is in the market, right? HJ say business will go down. So this is like a kind of a endless spiral. So need to get out of it. And of course, once company earn lesser, revenue lesser, profits lesser, okay, their earnings also drop, which means, okay, then the stock prices will drop as well. All this will link together. Of course, this is one of the, logical answer, okay, but what I'm trying to say is that, at that point in time, the market, the media can give you any reason, okay? So just treat the reason as a pinch of salt, but generally, if you want to see what will happen, okay, this is like the sequence, okay? So people are anticipating that all this will happen. That's why the market, that's the reason why the market, is dropping at the moment, okay? All right. So the actual reason not very important. At the end of the day, we are traders. I still focus on the price action. But again, I'm not saying that macro is not important. It is sometimes that, it is complicated to a extent that, it might not help me in my short-term trading, okay? Of course, you think it helps you, okay, then go ahead and use it lah, all right? Okay, so, okay, another one is that, CJ asked me, on the trading view, there are many different S&P, 500. So which one to use? Okay, so I'll go back to S&P 500 on trading view over here. All right, so if you actually search on the ticker, all right, if you search from SPX, okay, SPX, there's quite a few, okay. This the index, CFD from S&P and the CFD from TradingView itself, okay, and then of the CBOE S&P 500, SPX, all right. And then if you search SP 500, I think that's what he's referring to. Then a lot more S&P 500, S&P Cash Index, S&P, and such. So all these, you need to understand that TradingView has a lot of brokers. So like, for example, this SP 500, it is taken from this Vantage broker CFD prices, all right? So you can take from Vantage CFD and other, from, I think a lot of other brokers now. So there's a lot. So in actual fact, you just need to take note of this. Okay, SPX, just search for SPX. You can take the TVC or the SP1. Okay, so that is good enough. Okay, this is the cash spot index. So every time you hear that, the newspaper, the media, online media, they always quote the numbers. The S&P drop 20%, how many percent, or increase how many percent is from all these numbers over here from this spot cash index. All right, of course, the one that I normally look at, it is actually the ES. ES is the E-mini S&P 500 futures. All right, and normally there's a lot of contracts, but I normally just take the continuous contract over here. Okay, Ken, if everything is okay, right, just type okay in the comments on this SPX confusion over here. I'm not sure how many of you have this confusion. So we have a lot of data from different various brokers. So just use the default data from TradingView is good enough. All right, Ken? Okay. And anyway, by the way, I think, of course, you might have heard people saying that, I want the Fed to pivot. I want the Fed to pivot, to lower the interest rate as well, right? So actually, historically, a Fed pivot, it is not the end of the bear market. I actually mentioned, I think, 2 Facebook Live ago, 2 sessions ago, but I didn't get the data over here. So people always wanted a pivot, but be careful what you wish for over here. So let me share with you the chart once again over here. So Fed pivot, this one, okay? So Fed pivot is over here. So this data taken from elsewhere, also from this real investment advice over here. Do you realize that, every time the Fed pivot over here, the market crash even further, okay? So you can see most recently, okay, All right, of course, this is the COVID, crash, market crash. Before that in 2004 to 2008, by the time the market, the Fed just are increasing the interest rate. Okay, by the time it pivot, okay, the market crash. All right, and then in 2000 dot-com crisis, okay, and just about the Fed about to pivot, okay, or pivoting at the same time, okay, the market also crashed. So go back to 1980s, 1972, it is also the same. Once the interest rate hit a peak over here, and then the Fed start to lower the interest rate, so-called the pivoting, okay, then the market crash, the market crash. So be careful what you wish for over here. And this is some data over here, right? When the Fed pivot, okay, Fed pivot meaning that Fed pivot meaning that the Fed will lower the interest rate. So let's say, for example, the terminal rate that they targeted next year, it is at about 5%, 5.1% to 5.25%. So when they pivot, meaning that they'll start to lower the interest rate. So from 5.25 to 5% to 4.75% to 4.5%. That's when by Fed pivoting. Okay, all right. So based on historical data over here, all right, some of the dot-com crisis, great financial crisis, okay, from the Fed pivot, okay, until S&P bottom, okay, it takes 18 months, okay. Some of the data over here not important. So what you need to understand that all this, okay, after the Fed pivot, lower the interest rate, all right, the market continue to crash more. So at this point in time, okay, do you want the Fed to pivot or not? Okay, my historically it is lah, but I hope that the Fed continue to raise interest rate at a more sustainable rate, okay, 0.25, 0.25, that kind, I think is good enough. All right. Another reason why I think the Fed, okay, this is just based on personal opinion. I'm not sure whether you might have heard of this explanation before. Okay, I think because right now the Fed, can increase interest rate. Okay, they could. Okay, so they try to increase a little bit more because maybe they believe, okay, next year or so, I don't know what's the lag time, the economy is going to have a recession. If you're going to have recession, it could be 3 months down the road, it can be 6 months down the road, it can be 1 year down the road. Okay, all right. So based on some of the 10-year minus 3 months yield, okay, the probability is about, I think third quarter, that's about September period. Okay, then there could be the recession. Of course, the recession will depend on when NABE, okay, again, when NABE announced the recession, okay, neighbor, okay, National Bureau of Economic Research, okay, when they announce recession, then it is officially a recession, okay. But when neighbor never announced, it is still no recession yet, so nobody knows. So at this point in time, I think what my opinion is that the Fed can increase, they increase more because they possibly they think that they know that the recession is going to come, okay, it's going to come hard, okay, and it could be a prolonged, recession or what it is. I don't know what it is because right now you might have really know, okay, the yield curve really inverted for more than 80% of all the inversion, okay, all the yield curve inversion, like for example, 10-year, 3 month, 10-year, 2-year, 20-year, whatever it is, 10 months, okay, 10 to, like 30-year to that kind of different kind of yield curve lah. All right. So when the recession really comes, okay, the Fed, okay, would want to have enough bullets, okay, to lower the interest rate, okay, from 5% to to 3 to 4% to 3% to 2%, maybe to even near zero interest rate once again. So they want to have sufficient bullets to lower the interest rate, to have the monetary policy, okay. That's my own belief. So next year, recession could be there, but we don't know when. So they want to have enough bullets so that they can cushion the recession by lowering the interest rate. At that point in time, whatever they want to do, print more money, that might come again. Okay. So if you understand what I'm trying to say, just type bullets in the comments. So when they have a 5% interest rate, they have a lot of bullets, okay, to lower the interest rate. So that's my reason why. Possibly, if they can, they just increase the interest rate right now, okay? as high as possible. That's my personal opinion. Okay, I'm not sure whether you agree with me. If you don't agree with me, it doesn't matter. Also, this is just my personal opinion. All right, Ken. Okay, so yeah. Okay, so let's take a look at the okay. Sorry. So and other things to share with you. I think you might have heard of this thing dot plot before. Okay. Basically the dot plot is essentially all the Fed, key personnel, different federal banks, they give the consensus of what they think the market need to increase the interest rate to. Okay, so I'll post the link in the comments. All right. So this is this. Okay, not important, not important. Okay, or not important. So the dot plot is actually here. Okay, I try to zoom in. Dot plot. Can you see over here, right? In 2022, all right. So the consensus from all the participants, okay. So FOMC participants, okay, it is about 4.5%. Okay, so in 2023, the consensus is all the consensus is there. Okay, they want to achieve at about maybe about 25%, okay, terminal rate. So that's where they get all this. So they need the consensus from all these FOMC participants. Anyway, not important. This is just for information purpose. Okay, so I'll post the link in the comments. You want to go through all the data, GDP and such. Okay, you can go through all these things yourself. Okay, I'll post the link in the comments once again. You can see it. Okay, all right. Okay, so Yi Yang said, yeah, they can increase and hold also. Yes, they could, okay? But my belief that, if really things really sour, they want to have the bullets to reduce the interest rate. Okay, all right. So I've done this. Okay, let's go to the market right now. Market right now. Okay, so of course, this is the S&P 500. I'll go through the chart right now over here. Okay. All right, so this is the chart. So at one glance, people always draw this trend line over here. So this is once again, resisted. Okay. All right. So, but as I said earlier, okay, in the Telegram channel over here. So last week or so, okay. Not last week, December 13th, yeah, this week. Okay, so I say that there's a divergence between the indices and the VVIX over VIX ratio. So that's the reason I'll be wary. But I just want to tell you that, as I mentioned last week, I also do have two positions. One is GTX, another one is a small cap stocks. Okay, so I got stop out as well. So the reason is because I want just at that point in time, the market was above the 200 days moving average. Okay, so I was thinking that what if the market continues to go higher? So I also don't want to lose out on some of the positions. So I hold just two positions, just two small positions. So I stop out. That's fine. But eventually, the VVIX proven right again. Okay, the market, it is something fishy going on. All right. So as of now, the S&P is down 1.34%. Dow is down 1.13%, NASDAQ is down 1.02%. So later I'll go through the VVIX again. Okay. So prior to that, I mentioned that the central pivot range is this line over here, right? It is over here, right? So right now, price has broken below the central pivot range. So prior to that, as I mentioned, 3960 was the strong support, should be the strong support near somewhere near here, based on the volume profile over here. Okay. All right, but price do hover around there, goes up, do a false breakout, and then come back down again. But right now for the S&P 500, just to let you know that right now we are once again, hitting near to me at least an important support level. Okay, I think I feel a bit hot. Make it colder. Okay. Okay, so right now we are at the support right now. So right now, okay, can you see that, this is the flat price again, the flat cloud support over here. Okay, we are hitting this level at about 3870. Okay, 3870. Okay, price seems to the low is at this level. Okay, and then we are also hitting near the S1 level, 3853. about 3855, 3850, okay? 3850. All right, so which means that this between 3870 and 3850 will be a strong support zone over here, which is basically these two lines over here, 3850. So if price really do break below 3850, then it might not be so bullish anymore. And a lot of time, I think I mentioned before, in an uptrend, okay, normally the pivot point S1 is like the last line of defense. Okay, so I don't really want price to break below this S1 level, which is at about 3850. Okay, and of course, right now price is already below the central pivot range. Okay, so if you want to go long, okay, do go slow. Okay, not the best time to be aggressive long over here until you have a better signal over here. Okay, so from another thing that I want to share with you is on the maybe let's take a look at the volume profile, see what are the potential support area over here. So let's take from this swing low to the swing high over here. All right, so see at which volume is there the at the highest at which price is there the highest volume over there. Okay, so from the fixed volume profile over here, from the swing low, okay, to the swing high over here. Okay, not much here, but you can see over here, this is the value area. Okay, so where the 70% where the volume it is located, it is also acting as a prior support area as well. But this is the it will go quite low, it's quite low. So we don't think too much ahead later first. Okay, so let's just focus on the most current support area, which is at about 3850, somewhere around here. Okay, somewhere we are somewhere near there, and also the chart support. Let's see if the market can turn. Okay, of course, NASDAQ, it is the weaker one. So again, I also don't want price to break below the S1 level, which is at about 11190. Okay, 11190. I don't want price to go below that. But right now we are also at a support area at the Camarilla pivot. Not important. This is just a minor support that I always use. Camarilla pivot. Okay, and then Dow is the strongest one among the three. Okay, now stronger among number three. Okay, all right. So yeah, by the way, these black line here are the VWAP, anchor VWAP. So it's also hitting at a support area right now. Okay, by the way, okay, I think it has been quite some time since I talked about anchor VWAP. So sometimes, not a lot of times, the market just keep dropping. I need to find different methods to determine the support and resistance. Okay, generally most of the time I just use the pivot points and the cloud. That is good enough, plus the volume profile. But sometimes I do look at the anchor VWAP. So anchor VWAP, you can anchor at certain area. For example, all right, where is the high volume? So anchor VWAP. VWAP basically is the all right, volume weighted average price. Volume weighted average price. Basically, it is like the moving average, but okay, you factor in the volume. So you put more weight, okay, on those with a high volume day. So let's say, for example, anchor VWAP. Okay, on the trading view on the left hand side, you can see the button over here. You just go there, right, and search anchor VWAP. So previously, right, the high volume area is on the CPI date is on the 13th of October. Okay, so put one over here. Okay, so you can see that generally the market seems like responding to this anchor VWAP. Of course, today price has broken below that. And okay, another high volume area that I look at is actually on the previous month, on the 13th of September over here, the high volume area over here. Okay, you can just go in and take a look. Okay, high volume area. So you can see that this is also like acting like a support zone over here. So we are somewhere around there. If okay, the market really decided to turn, right now we are somewhere around near the potential turning point somewhere around there already, if the market really want to turn up. Okay, if you understand what I'm trying to say, okay, just type yes. If you understand, just type yes. So we are somewhere around there already, if the market really want to turn up, okay, which I believe so. And again, on seasoners, okay, so this one, the one that I shared before previously, okay, we are there already. Okay, let's say if you still strongly believe on seasoners, okay, you think that the center rally still might come, okay, right now December 15, okay, is the time. Generally the market on December ping pong, okay, and then in the mid of December, then this is where the center rally will come, and right now we are there already, so somewhere around there. So let's see whether the market do give us a signal, okay, to go long in the coming 1 week or so. Once again, I'm still bullish, okay, I'm still not that bearish yet, okay, I'm still not that bearish yet, okay. Again, okay, in past recent days, you will have heard of certain on Facebook, on gurus, whatever it is, okay, influencer, and all the best start to come again now, okay, their time has come, okay, and then they start to shout again, see, I told you already, it is an irrational rally, this is a bear market rally, okay, the market is going to come down, okay, whatever it is, I respect their opinion, it is fine, but as of now, I don't have the intention to short yet, okay, I still feel that we could still see a market rally, okay, maybe not a very strong rally as in there's a turning point coming soon. Again, I could be wrong, so please don't copy me, just treat my opinion as with a pinch of salt. I could be wrong, all right, but I will see how the VVIX is reacting. So okay, so I'll go through the VVIX. Okay, so why previously, as I mentioned, right, so why I was a bit skeptical of the point in time CPI, data and such. Okay, so as I mentioned, VVIX ratio, there's a divergence. So let me try to explain to you. Okay, so let me try to go slow. Remove this. Okay, let's go to VVIX. Oh, not this one. It is over here. Okay, so at the top, it is the VVIX ratio over here. All right, so for those who are new, you can treat it like overbought, oversold area. At the top, people are complacent. At the bottom, traders are kind of fearful. All right, and you can see that generally it kind of mimic the movement of the S&P 500. So it goes very similar over here. All right, so just let me change it to the candles over here, then you can see better. Okay, so I think you guys can see right from this channel. So I repeat, okay, at the top it is the VVIX ratio, at the bottom here is the SPY. All right, S&P 500. Okay, so try to zoom in. Okay, all right, so I think a few days ago, all right, on the 7, 8, 9, just before the CPI data was released over here on the 13th, right? All right, so while the market is hovering, ranging, which is pretty common, okay, before a major announcement is made, like for example CPI Fed meeting, okay, but okay, there was a divergence in the VVIX over VIX ratio over here. So while it is ranging, okay, the VVIX continue to keep going down. So that's the reason why I was a bit wary. So then, maybe the market knows something that I don't know. But then, okay, on the day itself, on the 13th itself, okay, so the S&P 500 actually, chong, okay, and then after that, chong again, okay. So I think, wow, am I really wrong, really? Okay, so but then, okay, when I see this, long shadow coming in. Okay, and then I realized, hey, okay, this is going to be some selling coming soon because this is a false breakout. This is a false breakout. So a lot of people are thinking that, hey, wow, you know, this is a trend line, you know, very obvious trend line, you know, trend line, and then they try to buy this breakout. So obvious, right? They go and buy this breakout. Then after it fail, then know that the selling is going to come already. So that's the reason why a bit wary. Okay, of course, you know, my 2 position was stop out as well, so it doesn't matter lah. So it's okay because that's the reason why. So if you again entertain me, if you understand what I'm trying to say on this VVIX, you get it. Okay, just type VVIX in the comments. Just type VVIX in the comments. Okay, so right now we have about 270 people in the room. Okay, I think thank you for joining me. I hope you learned something new from this sharing session today. All right, so once again, for those who don't know, we have this Market Insights Virtual Summit that is coming up on the 14th and 15th of January. Okay, and of course, new year, new outlook, new opportunities. Okay, you want to know how, you know, the professionals are going to invest, you know, what's their strategies. Okay, the keynote speaker is Ray Barros and also Mr. Lu Cheng Chuan, the 1M65, you know, founder movement. Okay. All right. So do register for this event. Just key in your name, email address, and mobile, and you are good to go. Let me post the link in the comments over here. All right. So you can see it. And then, yeah, I will, of course, lucky draw and also this seasonal stock market trend. Okay. Okay. I want to repeat again for this seasonal market trend, which I already explained in the bonus training video. We need to see how the market is going to perform, okay, in 2023. If the market is continue to be bullish, then this stock market trend will help you, okay. But if the market suddenly crash, you know, in January, in February, it's going to crash as well, then, okay, you might want to take note that this seasonal stock market trend, okay, might not be so helpful because, okay, overall the market is down, okay. You're going to drag everything down as well, right? It depending on the broad market condition. All right, so this is how the report will look like. All right, so the seasonal stock market trend, I'll list to you for the first quarter. A lot of these sectors industry over here. So for example, you know, so on the 2nd Jan, you open on 2nd Jan, close on 21st Feb. Okay, out of this past 12 years, 92% it is, you know, winning. Okay, it is in the industrial, aerospace, and defense industry as such. Okay, all right. So this, I think, is pretty useful. Okay, so do register for this event. Okay, all right. Mark, I think you just joined not too long ago on this Facebook Live, right? So just now I mentioned already. So all right, I already sent out this email, I think a few days ago. It is in your email. All right, so please search for my email address, and then you should be able to see, you know, download this stocks seasonal market trend, something like this. Okay, search for email. So if you still can't find it, okay, search in the spam folder. It should be there. All right, or if not, just email me again. Okay, I will let you have it. All right, can okay, let me close all the things first. Too many tabs. Later my computer crash. Okay, so these are things that I mentioned over here. So as of now, okay, what I see from the VVIX, okay, there's also something interesting that's going on. Okay, let's see how it pan out over here. All right. So this VVIX back again over here. Okay, so I use this chart over here, style candles. Okay. All right. So not exactly divergence over here. So, but you can see that while the index is coming down all the way. All right. Okay, bottom one is SPY, S&P 500 is coming down all the way, very strong selling. But the VVIX, it is holding on pretty well. Okay, the VVIX is holding on pretty well. Okay, it is not really, you know, coming down like what the S&P 500 it is doing. So again, I'm not sure how this will pan out. Is the VIX ratio is the market internals showing us something, that we don't know. Something that's what the market knows that we don't know. What the markets know that we don't know. We shall see how it goes. Okay. But as I mentioned also, sorry for jumping here and there, but because this is normally how I look at the market also. Then you see that previously I also talked about the the VIX, right? So I mentioned about the star signal, right? So it is still working well. That's the uncertain part that I'm not sure how the market will pan out, because if you realize previously I mentioned that the market has a star signal, which means that there's a volatility event coming soon, which is going to spike up. Okay, spike up. Every time got a star. Okay, a lot of time when there's a star, okay, you spike up. It's spike up, spike up. So this star signal previously I mentioned before. If you don't believe, check out my previous Facebook live. I anticipated that this market should have some kind of a sell-off. Okay, that's the reason why I don't aggressively go long. Okay, I just target a bit. Okay, yeah. So if you realize that every time there's a spike, it can last for quite a while. Can last for this is how many days? Okay, this is from mid-August until September. This is about 1 month. About 1 month. Okay, about 1 month. Then previously, okay, and then over here is a sort of a lengthy period of time for 1 month. Okay, when it spiked. Okay, and then spike also take some time. Okay, 1 month kind of period. Okay, once again, that's the thing that's holding me back, whether this will continue to spike like that. So yeah, so again, we have to see how it goes. So I'm also not sure. By the way, I'm not God lah. So I'm not sure how certain influencers out there, traders out there, gurus, they can be so certain. I can't be so certain. So I'm also looking at the market one day at a time. Okay, but generally, if I believe that if the market really want to have a strong support, it should be somewhere around right now already S&P 500 as I mentioned. Okay, so let's watch it over here. Okay, at this some 3850 3850 somewhere around here. Okay, and let's take a look at the dollar index over here. Okay, all right, so the dollar index is grossly oversold. It is grossly oversold. Okay, so that's the reason it is inversely correlated with the equities market. So that's the reason why when the dollar is down, the S&P 500 will go up. So right now the dollar seems like it's going to rebound higher, and if it is going to rebound a lot higher, then of course they will put additional stress on the equities market as well. All right, so we shall see how it goes right now. And then from the treasury bonds, okay, let's go to treasury bonds. Let's look at TLT. Okay, TLT over here. Okay, then you realize that recently the treasury bonds and the equities market, they are no longer correlated. So right now, okay, the relationship, okay, is like back to normal again. Okay, when the market sell off, okay, the treasury bonds is acting like a risk-off, safe haven. Okay, where the market participants, trader investors will pile onto the treasury bonds. So right now, it seems like it is acting in this way. Okay, so it is no longer kind of correlated with the equities market. All right. So this is something to take note of. Okay, so don't assume that previously it was down all the way. Okay, I can add in this to compare. Okay, SPY. Just new pane over here. See that previously, it was when it is up, it goes up. When it's down, it goes down. But right now, it is no longer the case. Is coming down, but this is still going up. It's just for you to take note of. All right. And for the another reason that I mentioned, okay, SPY and TLT, which I mentioned, I think last week or the week before, I forget already. So this ratio relationship between the SPY and the TLT, SPY, TLT over here. Okay, So I mentioned last week, this ratio, realized that, right now it is forming a kind of a very sweet channel over here. So if you add in the SPY over here, all right, so if you realize that the market bottom, okay, not the absolute bottom, but generally a bottom over here, okay, then you see that over here, this is at the lower end of the trend line over here, okay, and then you realize that it is marked the bottom over here also. Oh, it's not very straight, but at the bottom over here, it's marked at the bottom. So right now we are also somewhere near the bottom of the channel as well. Okay, so will it be going up? So there are a few factors I mentioned that make me not so bearish. One, of course, is this ratio chart. Secondly, is the price action on the S&P 500. S&P 500, okay, where we are somewhere near the strong support already, okay. Sampa within 3850, and also on the VVIX over VIX ratio, where it seems to tell me that the market doesn't seem to be as weak as it seems to be. So there are a few factors that make me think this way. Okay, of course, I could be wrong. The market can just continue to just boom, go down like this. Okay, but if you really zoom out over here, so this right now, it is still like a normal correction or not. So after it rally so hard, okay, pretty normal. I think this is a correction. It is pretty normal. So you cannot expect price to just go up all the way like this. Cannot. It's not sustainable lah. You get what I'm trying to say. So this is like pretty normal. So of course, if you zoom in like that, wow, very scary. Wow, the market is going to crash. This is down 2.57%. This is down to this down 1.47%, 45%. But zoom out. This looks normal to me, right? After that, a rally, impulse leg, and then correction leg. This still look pretty normal to me. Okay, I'm not sure about you. Still look okay to me now. Okay, it looks okay to me. Okay, all right. So as I mentioned, until price break below the S1 level for this month, then I'll be more bearish. Okay, Ken. All right. Stephen asked the very timely question: when will you start to be bearish inclined? That when price starting to break below the S1 level, price action tells me that it is really not strong. Then I will be more inclined. Okay. Of course, if you are a longer term trader, then don't be so anxious to go long now. Okay. Wait for price to at least go back above the central pivot range. Then you'll be more bullish. Okay. All right. But of course, when price is above the CPR, then a lot of times it kind of rally away already. They'll be a bit late already. So there's a trade-off lah. All right. Ken? Pull the FIBO, how much is the correction? Then only consider pullback with normal and not pullback anymore. So if you take a look at, I don't really use FIBO. I don't usually use FIBO, but we can take a look. All right, if you use FIBO over here, FIBO, it is FIBO. Oops. Okay, FIBO. All right, so right now we are from this swing, okay, so from this swing low to the swing high over here. All right, so right now we are somewhere near the 50% retracement level. So still pretty normal to me, 50%. Even at 618, 0.618, 61%, it is still pretty normal lah. Okay, still there. Okay, break below, then I'll be more cautious also. Somewhere around there. So we are already somewhere around there already. Okay, Ken? Again, we shall see how it goes. Any other questions? So right now we are into the 1 hour mark. Any questions? So today the attendance quite a bit, more than 250. Just now about 270 people in the room just now. So any question, we can answer a few questions before I call it a day. All right. So if you want to take a look at Hang Seng Index, Hang Seng Index is much more bullish. Okay, Hang Seng Index. Okay. So if you take a look at Hang Seng Index, okay, much bullish. Okay. So when the time the Angmo say that China is uninvestable, that somewhere marks the bottom and then price just ready. So right now, last month was the first month below the central pivot range. This month, I think there's a very good chance that price will stay above the central pivot range. So 2 consecutive months stay above the central pivot range. All right. Okay. Any other question before I call it a day? And once again, do register for this Market Insights Virtual Summit. I post the link in the comments. Happening on the 14th and 15th of January. Ray Barros, Mr. Lu Cheng Chuan, okay, Bini, Jay, okay, Colleen, Caden, and Royston will be speaking as well. We are still onboarding some speakers. Okay, we're still onboarding some speakers. There could be a few more speakers coming soon. But yeah, it is free. So do register for this event. Name, email, mobile, and you are good to go. And you get to receive these seasonal stock market trends for the first quarter of 2023 plus the bonus training video. All right. CJ asks, can you explain the indicator with the 3 horizontal? CJ, you are with me for so long. This one is the central pivot range. This green dotted line is the central pivot range. Price is above the central pivot range. Okay, central pivot range already. Central pivot range. All right. So Calvin is asking, can I take a look at the Tesla chart? Understand it is bearish. Any indication of turning point based on TA? Okay. Tesla over here. Yeah, it is still pretty bearish right now. So let me take a look at this. You give me a moment over here. I need to check my star signal, see whether got any potential star signal on Tesla. Okay, yeah. Okay, so all right, so let me try to put in my star signal over here. Oh, where's the star? So previously, the star signal, there's one Tesla over here. There's one over here. There's one over here. And then right now we have another one over here. Let me see previously. Another one. Over here. Oops. Okay. So for Tesla, okay, previously my star signal, there is another one here. Not too bad. There's some, if you're talking about in terms of trading, okay, if you're talking about in terms of trading, all right, there are some profits to be made, okay. Here also, in September, there's a star signal, there's a profit to be made. There's profit to be made. Of course, not every time June. So this one doesn't really accurate. Okay, it's still come plunge down. Here, over here. All right, if you really want to hit and run, potentially there's some minor profits to take. Okay, all right, and right now it is showing a star signal once again. Okay, so again, whether price can go up is another question, but it is against the trend, and Tesla is really not strong. So it is a counter that I wouldn't want to go long, even though price can just rally like that. Of course, if price really rally, then I'll be happy as well, because Tesla carries a lot of weight. Not carries a lot. I mean that there's quite a bit of weight on the index. If Tesla do rally, okay, then a lot of times, okay, I believe the indices will rally as well. So Kelvin, so this is my kind of a proprietary, indicator, so I won't tell you how I get a star signal. So far, it works on VIX and VVIX as well, okay? It works on VIX and VVIX as well, okay? So what is the indicator for this star signal? So Korean, as I mentioned, I'm not revealing to the public, so this is just my personal toolkit, so I'm using it for myself. All right. Dale Om, does your star also give signal that it's about to tank? Yes. So there's a reversal and also it kind of do both okay, reversal at the top and also at the bottom as well. Okay, but again, it is not 100% winning tool. Okay, it's just another tool. Okay, you still need to I still need to put in other analysis on other trend line, whatever it is, pivot point, cloud to give me a better judgment. All right, Ken. So yeah. So any other question before I call it a day? So I hope you guys get some value from today's session over here. So once again, just a very quick recap. I am still slight bullish until price break below this 3850. Okay, it can break 3850, then I think there'll be more downside to go. So until now, I think we can still look for a potential turning point over here. Okay, all right. Again, I could be wrong. Nothing is certain. Okay, so yeah. All right, so I think that's all for today. If you find value in this Facebook Live, do give me a like, share, or comments. Give me an angry face also can. Give me a like, share, or comments. If you are enjoying yourself, this session, just type value in the comments. Right? If you enjoy this session, you find value in this session. Once again, last call, do join this Market Insights Virtual Summit that's coming up on the 14th and 15th of January. Once again, it is free. New speakers, resident speakers, we also have. So do register and also get this lucky draw and also the seasonal stock market trends for the first quarter of 2023 bonus reports. Okay, so once again, thank you so much for staying with me until 12:30. So tonight, no workout. Tomorrow it is the third place, and then on Sunday it is the World Cup final. Okay. So once again, I wish you have a very good evening ahead and also a good weekend ahead. So once again, thank you so much. See you again. Good night, 晚安, and bye-bye.